Hey everyone, we're going to go over what an offer looks like. So you hear the term offer, and it's really just referring to what's called an agreement of sale. This is all in Pennsylvania. They're similar in other states, but for the most part, what we're going to be talking about today is Pennsylvania. So the first thing, this is in zip forms here. So this is where I would go through and I'd fill in information for the buyer, who the seller is, addresses, information about the property. So we get all that in order to plug that in there. And then information about the agents and what broker they're with. So that's really all stuff that the agent will do and nothing for you to decide. But usually I tell buyers there are a couple of things that we're going to need to discuss when you're ready to put an offer in. And it's best to kind of know about them in advance, because then you'll already be prepared. You won't have to learn about it at the same time that you're having to make decisions. So obviously we put the date in there. Purchase price. What's your offer going to be? 300,000. We'll put that in there and it automatically populates. This is your deposit. So this is your earnest money deposit, basically stating that you're not going to just change your mind when you find another property you like better. You have to submit that to either a title company or one of the brokers in a few days after the offer is accepted. So that's after the date of execution. So that means, once this is all decided upon and signed, that's when you're going to submit either a wire or a certified check typically. One note about a wire is don't wire money even if it looks like it's coming from the right address. Always check with your agent, specifically call the title company, look their number up on some of the paperwork. Whoever is sending that to you, make sure that it's an actual correct wire instruction and not just someone hacking it to get your information. It happens all the time, and then people wire money to the wrong place and it's impossible to get back. So initial deposit, unless there are some holidays and weekends in there, I usually try to put a 3 in here because it shows the seller that you are serious about buying the property. Same thing with the amount for the deposit itself. So usually like a 3%, 4%. If you're really serious, maybe a 5 is a good amount. So on $300,000, $3,000 is 1%, 2% is 6, 9 is 3. I might say let's do somewhere in the range of $10,000 to $12,000. So let's put 11. All right. And what that does is it locks you in basically unless that contingency period, somewhere in that contingency period, which I'll talk about later, if at some point in there the deal falls through for one reason or another, you can get that back. So this goes into detail about how you're paying your funds, who's holding them. You don't need to worry about that necessarily. You do get to pick your title company, but usually an agent will recommend. So unless you have some sort of connection to one, I would try to go with someone that's recommended to you and not just the cheapest, because it's a huge decision in your life to buy a home, and you don't want to choose the cheapest possible people helping you. You want to choose the best. This is seller concessions. So a couple of things here. This one is for the agent's fee. So me as a buyer's agent, I'm going to be getting a fee to take you to these houses, to help you decide what types of terms you're offering, to walk you through the inspection process and really contract to close. So sometimes the seller's already decided what amount they're going to offer a buyer's agent who brings a buyer to their property. Other times they haven't, and you just have to work it into the contract. So usually that doesn't affect the buyer too much unless the seller isn't offering much of anything, and then the buyer may need to pay some of that, but that's more specific to who you're working with and what the seller's situation is. This is closing cost assistance. This one's huge. So for those of you that maybe don't have a whole lot of money saved, you're going to probably want or hope to get some closing cost assistance. What that means is you may be purchasing a house for $300,000 like we talked about, but you may be asking for some money that would otherwise be the seller's proceeds for them to concede some of that to you at closing. Meaning, maybe I'm going to ask for $3,000, okay, at closing from the seller. So in other words, instead of getting the 300,000 minus all the closing costs, the seller's now getting really 297, because 3,000 of what they would be getting is going to you now. So this, again, can be negotiated. So you submit the offer, you see what they say. They might say that's fine. They might say, no, we're not giving any seller concessions unless you go above asking price. So there's a lot of ways that can go there. Settlement date. This is usually best if you find out when the seller wants to close and it matches up with what you are hoping, or when you are hoping to close. So in this case, let me bring this back down here. Usually minimum is 2 weeks minimum, or 10 days is really the minimum for a cash offer. Everything else is going to be 3 weeks minimum. But you can go longer. You can go up to, 60 or even 90 days, even more if it's new construction or something. Depends totally on the situation. But typically a normal escrow period from the time you go under contract to the time you actually go to settlement or purchase the house, that's going to be in the range of like 30 to 60 days, usually max in most cases. So today is the 24th of January. Let's say I wanted, I'm supposed to be writing up an offer later today, I think, and they want a quick close. So they want to sell the house as soon as possible. They're already starting to move out. So I'm going to look and see, all right, when is about a month from today? All right, Monday the 24th. I might pick that. I might bump it up a little bit depending on who the lender is, if I think they can get it ready to go in time. But let's say I pick the 25th. Okay. This next thing, at the time of settlement, the following will be prorated on a daily basis. So this is all of, and again, this is in Pennsylvania, and different states do taxes and utilities differently, even by county, but this is all prorated. So at closing, as a buyer, the seller, at least in our part of Pennsylvania, has already paid for the taxes for that period. So they might have paid $8,000 in taxes for school, let's say. If you're buying in the middle of the school year, which is the tax period, you actually have to reimburse the seller for the part that they're not using. So if they're moving right in the middle of the tax period, school year for Pennsylvania here, tax bill goes from basically what a school year would run, from like August through the end of, or July through the end of June. So essentially, if you move in the middle, you're only responsible for that second half. All right. So you might have to bring $4,000 to closing to pay the seller back for those taxes that you're going to be using, which is another thing people don't totally know going into it or understand. And also transfer taxes. So most people don't change anything around here with taxes, but you could. Conveyance from the seller, which means the seller giving the property, or not giving, because you're obviously getting they're getting some sort of compensation, but they're signing over the deed to you. And the transfer tax is split, usually 50-50. In the area of Pennsylvania where I do most of my business, it's a 2% transfer tax. Usually the buyer pays 1%, the seller pays 1%. If you want to strengthen your offer and you do have some cash on hand, you can say something like buyer to pay, transfer taxes for seller, or something like that, which we actually might do today to make our offer look a little bit better. You don't need to worry about anything here in terms of changing anything. This is all standard language. This is if there's a tenant in there. And then written acceptance. So this is kind of like when your offer expires. And this is important because once your offer expires, the seller can't sign it without your consent to have it extended. and in which case the date needs to be changed. So if I were writing this offer for today and I say, I want to have an answer by tomorrow at noon. Oops. Okay. There's a lot of reasons you might have a longer deadline. You might have a shorter one. Your agent can talk to you about that, but we plug that in there depending on what we talk about. Zoning. So this is where your agent's just going to fill in what the zoning is for that. And here are some things that you do need to kind of discuss. So fixtures and personal properties. So typically anything that's a fixture or affixed to the house and considered part of the house is automatically assumed to be conveyed with the house. All right. So things like a ceiling fan, things like a chandelier, it's attached to the property. So you're going to assume that's going to go with the property. Same thing for the window treatment, brackets and things like that. That's assumed that that's going to be there. So if you don't want any of those things, you need to specify that here. Like I just had somebody, we submitted an offer and there was an old hot tub that didn't work in the backyard. They wanted to leave that there. Well, my buyer did not want to have that be her responsibility to have to pay to get that removed. So we then here, instead of including something, we decided we were going to exclude that. Okay. The seller might say in the description of the property, they're taking the dining room chandelier. Maybe you love that chandelier and you're like, no, even though it typically would be included, they said it was going to be excluded. So I want that. I'm going to ask for that. So you're going to put that in here. Things that are not automatically included. Appliances like a refrigerator, a washer, dryer, those are kind of the standalones. The only thing that, could sometimes be moved is like an oven that you can pull out from the wall, but that's actually typically included unless they state otherwise. Remember, they might say washer, dryer, refrigerator included. You might get to the house and you're walking around and you're like, these washer and dryers are so old. I don't want these. They look disgusting. I have my own. I just would rather, bring mine, but you don't want to have to get rid of them. So you want to put that in exclusions. You're going to tell them, nope, I don't want that there when I move in. All right. Buyer financing. So this is a contingency. You have to get a mortgage if you are applying for a mortgage in order to buy a house. And one of the things that people don't pay attention to typically is, especially first-time home buyers, is who they're using for a lender. That will be a separate video because I could talk for hours on that. But your lender is going to give you a pre-approval, and basically your agent is going to take that information and fill it in the financing section of the offer so that the seller knows what type of financing you're using, how much cash or access to funds that you might have in addition to what you need to purchase the house, because they don't want to agree for you to purchase it if there's a chance you're not going to be able to. So this is where you say, you're going to apply for the mortgage technically in a certain amount of time. This is for FHA and VA loans, VA being a veteran loan and FHA being the Federal Housing Administration. And that one is a VA loan for 0% down. Sometimes FHA is the same. FHA is typically 3.5% minimum. And they take a little bit of a lower credit score than a conventional loan. This is where you say whether you're electing a contingency or you're waiving it. So you might want to take out a mortgage, but you might not need to. So an example would be, I had a client who, she didn't end up buying anything, but she had several properties that she owned and, a good bit of money saved. And she could buy the house if she needed to in cash, if it came to it. And to get her offer accepted, she waived the mortgage contingency, even though she was going to be applying for the loan, which means no matter whether or not you get that mortgage, you're buying the house regardless.